I have started recording the call. So this is the keys to homeownership, and we do this the second Tuesday of every month. So those that are on the call, we obviously have loan officers on the call. We invite realtors. I see Karita's on here. Um, and it's always exciting for us to kind of go through this information. It does get recorded and does get uploaded to our YouTube channel where people can go back and learn from it later. So what's exciting is just being able to teach the class and going through the information. I love this quote. I used it last month, and I wanted to use it again. The Franklin D. Roosevelt: real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it is about the safest investment in the world. So that was a quote from a long time ago, but still true today. A little bit about our team. That's us and Love Can. Not right. We were celebrating Philip in December, and we were. I think what was that place, Ken? What's it called? Woodville.
Ezekiel's, I think, something like that.
Yeah,
Elijah's.
Elijah's, and
Wrong prophet.
we were in small town USA having a team meeting over a great deal of food. So we, as Ken said, and Philip and Ben, the diverse backgrounds, we're all very mature. We work with first time home buyers, seasoned buyers. We're an award winning group. Kind of work as a team, trying to learn some different things. We've all worked together for a really long time, and just kind of understand the mortgage process. We're not worried about the deposits. We look at all we do is mortgages all day and every day. I always encourage people to find out where their story starts. One of the things I was wanting to do today is just kind of show, for whatever reason, I can see all y'all, but I can't see myself. So that I wanted to be able to kind of show this picture instead of just showing it on the slide. But this is a picture of my grandfather who fought in World War II, and his name was Donald Schriever. And then below that picture is Ben's dad, who was served in the Navy. His name is Don Sinclair. So when we met, his dad was from Massachusetts, and my grandfather was from Massachusetts. And so there was a moment where I had to make sure I wasn't related to Ben before we went any further. So I was like, what? You know these people? He knew who the Shrievers were. And it was just kind of one of those kind of scary moments. But Ben's parents met in the Navy, so that was great. And then the picture to the right is Zachary, where my bonus son served in the Navy. He still serves in the Navy Reserves. And then our daughter Landry, who is now 12 years old and wants to be a recruit. That's her recruit hat, Navy recruit hat. So the reason I share this story and to share the picture of the house, and I do this on every call, but this is the house I grew up in Arlington, Texas, on Westview Terrace. It pretty much looks just like this right now. And my parents rented my childhood home for 19 years. And they didn't rent the childhood home for 19 years because they weren't unable to pay, but they rented the childhood home for 19 years because they were sure they wanted my dad wanted my brother and I to go to the same school in the same school district the whole time. And the lady that owned it, his name is Gladys, and she didn't want to sell it. And he tried to buy it from her several times, and she wouldn't sell it to him. And what happens is, and this is the reason why we do this call, is 6 months. I'm going to do something about that in 6 months. And 6 months turns into like 6 years like that. If anybody on this call has children, you know that. Like I can remember, and Karita remembers when I got Landry, and Landry's 12 years old. And when they brought her to me, she was a 12-month-old baby. And that seems like yesterday, literally yesterday. So that's what happens with home ownership, is that you don't know what to do. So then we freeze and we don't learn. And when we don't learn, we don't know how to create or build equity. Our team is now licensed officially in Texas, Oklahoma, Arkansas, Florida, and Louisiana. So if you have kids and those kids go to colleges in those states, and maybe instead of paying for the dorm room, you want an opportunity to buy some investment property while they're at college, we're happy to help with that. Or maybe you need a second home in Florida. My daughter calls it Florida. So maybe that would be something that you would need. And then the last thing before I introduce our guest is I like to show this. This is something that Texas Realtors put together. And it's a few years, a year and a half or so old, but it just talks about home buyers in Texas versus home buyers in the United States. And a reason why I show this is that a lot of times people will say, I mean, every single week I get a phone call where somebody says, have I waited too long to purchase a home? Am I too old to purchase a home? Well, of course not. One, that's discrimination, but there are no expiration dates on dreams. And there are no expiration dates on the opportunity to be a homeowner or learn what to do. And this will tell you that 47 years old is the median age of the homebuyer in Texas. I know that sounds crazy. I was just reading the Texas Realtor magazine over the weekend, and it says that last year the median age was 49. And previous to that, it was 56. So my parents owned the only home they ever owned in their marriage was late in life. My mom still lives in that home now. It's the only home that they owned. I helped them get in Flower Mound, Texas. And my mom is 84 years old, and she still lives in that home today. And she has built a great deal of equity. And for those of you that will understand this math, I can tell you that when I helped them purchase that home, it was $159,000. And so I don't know if you can find a house in Flower Mound for $159,000 these days, but it's on a great lot, and we built some great equity over the course of time. But I just like this because it talks about what amount of time it takes to find a home, 9 weeks, 21% of homeowners or spouse is active duty military. We do veteran loans. We love that. That's one of the things that we enjoy the most. And so what I wanted to do is introduce our special guest. And what I love is that he is going to lean into why buy and why buy right now. But this guy has been a great friend and a great mentor to me. And we've had lots of phone calls during the most difficult times in the last couple of years in the mortgage and title space. But he is the North Division president of Stewart Title, and I call him the Great Nate. So the Great Nate Pruitt is here. And Kelly, I wasn't able to get that slide. So if you could just put that information in the chat. I'd like to provide Nate with some information, his information. Stewart Title is a great title office. There are a lot of different Stewart Title offices. I think, Nate, you could kind of speak a little bit to that. But I can't wait to ask him a few questions, but I'm just going to let him share his knowledge as he sees himself in the background there.
Well, let's see if I can live up to all that. Thanks, Stacy. It's good to be here. Thanks for calling me yesterday. It's exciting to talk to people that are interested in purchasing a house, maybe for the first time. And it's just one of those things. I just want to take an evening and take the time and try to help some folks. So with a little bit of experience. So if you're taking notes, I didn't do slides. You can take pictures of with your phone real quick. Sorry about that.
No.
But most of you just don't even know what title insurance is or really what a title company does. So I thought that might be the most helpful. So if you're taking notes, there's two parts of the title company, okay? And one is that we act as what's called the settlement agent, also known as escrow officer, also known as escrow closing, also known as closing. And that function of settlement agent, again, if you're taking notes, think of it like this, is we're kind of the hub of the wheel, all right? Everything from the transaction comes to us. The realtors with the contract, the buyers with the money, sellers, home warranty, inspections, everything comes to the settlement agent, which is us, okay? We take in all information and money. We then police the transaction for you. We're demanded by law to be disinterested. Okay, so we don't take the seller or buyer's side. We don't take a realtor's perspective over another realtor's perspective. We are disinterested, but our main function as the settlement agent is to police the transaction and make sure everything happens the way it's intended to, in accordance with the contract and a title commitment. and lender's instructions. So that is our main role for you, the buyer, is to understand what we do is coordinate everything for everyone. All right. That's one aspect of what we do. The reason it's called a title company or title insurance company is that's our second function. Okay. The service we provide as a settlement agent, which I previously described, that's our hook to get business in the door, is we provide those services in order to get you in the door at the title company. But our real function and where we make our money is issuing a title insurance policy. We're an insurance company, okay? So we provide those services to get the transaction in the hopes that we can write an insurance policy, which is where a title company makes its money. So if you're taking notes, there's two policies typically in each transaction. One protects you. Ironically, typically it's bought by the seller for you. The other one you buy, and ironically, when you buy it against yourself for the lender. So here's what happens. The seller typically will buy what's called an owner's policy, and that means that we as a settlement agent take away all their junk. Anything they've put on the property, any rights, any liens, any loans, child support liens, any judgments, it's then our responsibility to remove all of the seller's junk and then issue a policy that says you own it as the buyer. Okay? We ensure your ownership and marketability of this property, meaning you have the ability to sell it in the future. Well, why do you need that? Because Stacy can't give you the loan unless you're insured as the owner. No lender will give you money unless they know you own the property. Okay, so that's all part of the transaction that happens simultaneously. When you want somebody's money, they're only going to loan it to you when they know you own the property. And that's what that owner's title insurance policy does. It ensures your ownership. So let's say somebody from history pops up and says, I was the long lost nephew. I have this napkin that says my uncle wished that I had 50% ownership of this property. We would pay that person to go away to protect your ownership as the buyer, okay, as the homeowner. And so that's the function of an owner's title insurance policy, okay? The second policy that you're going to get protects your lender, all right? So again, anytime we borrow somebody's money, which we need to buy a house, they have a set of rules that hey, you're welcome to our money for these terms. Well, part of it is they want to be insured in what's called a lien position. And all that really means is a first mortgage. You've all heard that term, first mortgage. What that refers to is first lien position. You've heard of a second mortgage or home equity line of credit. Second mortgage is second lien position. We insure the lien position so that if you miss your payments, the lender then gets paid first or second or in that order when the property is auctioned off. Let's say you miss all your payments, unfortunately, whatever, and that property goes through foreclosure. You're buying your lender a loan policy to insure them in first lien position, okay? In Texas, the beautiful thing about that is that's $100. So that because the ownership policy takes on all the risk, and that's typically paid for by the seller. The only title insurance policy you buy doesn't have much risk and is $100. So that's the good news for you as a buyer. Okay. For the settlement agent piece, where if you think about us as the hub of the wheel, and everything's coming to us, and then we pay out the seller and we pay off everything that was against the property. For that function, a buyer anywhere in the DFW market will pay somewhere around $550. Okay, $550 would be your side, and then the seller would pay $550 as well. So that the function of the title company as a buyer provides you an enormous amount of service and satisfy your lender requirements for about $700. So it's a very reasonable thing in Texas for the buyer in order to have a settlement agent, have an owner's policy protecting you, having a loan policy protecting your lender. So is that kind of what you were looking for, Stacy?
Oh, yeah.
Is kind of
So,
what we do?
I mean, I think that what I think is great about what you're talking about is that there's so many elements to the puzzle. And I think that sometimes with first time home buyers and just even if you haven't owned a home in a long time, I think sometimes it can be overwhelming. There's just so many pieces to the puzzle. And it's like baking a cake, right? You have a recipe and you have to have every piece of the recipe and the correct ingredients has to go in it or it's not going to taste very good, right? So you have to have, I want you to touch on one thing that is important. And the reason, like I said, when I talk about all the different pieces of the puzzle, you have the house, you need a realtor to help you find a house. You need a mortgage professional to tell you what you qualify for so that you don't go try and looking at something you don't qualify for. And so that the mortgage can be approved. We have underwriters, and then we have title companies. And oftentimes, the title company, like on our team, which I failed to introduce, and I didn't want her to have to introduce herself, so I did not forget about her. But Kelly is on the call, and Kelly, I always say Kelly is our big toe, and then she says, "I'm looking for my promotion to become the right arm," right? But Kelly orders all of the title work at the very beginning for all the loans on our team, which is quite an undertaking. There are times where that's busier than other times, but then she has to follow up with the title company, get all the pieces of the puzzle and, check out Schedule C and some of the things that we do. And then we go along in the process, we get the title work. And then when we go at the end and the customer comes to closing, oftentimes, the customer, that's the first interaction they have, with the title company. So they're the last end of the puzzle. So this is so critical because if you've got something that has been challenging or whatnot, that title company can make it such a successful transaction at the very end, or sometimes maybe potentially not. And I just wanted you to speak to what you think the primary function is of a settlement agent, or some people refer to it as an escrow officer, and how important that is.
Yeah, it's very important. And so, again, if you're out there taking notes on things, those three things I mentioned earlier are critical in regards to Stacy's question. As a settlement agent, there's I call them the three Bibles, right? We have the property research, which is
Ooh, the three Bibles. I like it.
Yeah, property research, which is the title commitment, or let's just call that the owner's title policy that I described earlier. Okay, everything to do with the property, who's owned it, what we call the chain of title, and mineral rights, everything that you're buying in terms of property records, okay, and the property itself, okay, that's one of the Bibles. The second one is obviously the contract, okay, and that's your realtors and the contract you signed to get under contract, and you've negotiated and you've signed buyer and seller the contract, okay. The third thing, the third Bible that a settlement agent has is the lender's instructions. So if you borrow money and you're going to get a loan, Stacy and Ben and Philip, we're going to get from them your loan documents, okay? But critical to us is the lender's instructions. And what that's going to say is these documents have to be executed by this date. These things, we looked at the property research that you sent us, and these things have to go away in order for us to loan the money and you to issue the policy. So we make sure those things happen, right? And so those lender's instructions, whether 4 pages or 6 or 8 pages, are basically a Bible of the loan. The contract is the Bible of the real estate agreement, okay? And then at what we do, the title commitment, the property research, is kind of the Bible of transferring the property from the seller to you. So those three things are what in Texas, you have to be licensed to be a settlement agent, an escrow officer. And so a licensed escrow officer, also known as settlement agent, strictly works off of those three things in order to make the transaction happen. And then, of course, there's more if you get a home warranty, inspection, and we deal with all that too. But in terms of policing the contract and making sure that everybody is abiding by what's agreed upon in writing, it's those three things in writing: property research, lender's instruction, contract.
So let me ask this question. What, just in, again, I know that you're not in the survey business, but you could speak to what a T47 is, for example.
Right. So survey coverage. Texas is a little bit different about surveys.
We've had so much fun with surveys, Karita, haven't we?
They like
surveys are so fun.
We like in Texas. We like our surveys.
I think one of the greatest things is that people ask me all the time. I had this happen today. Well, what exactly is a survey? And I describe it as a lot and block legal description of your property with easements. Now, I would love for you to, if that's not correct, maybe you could tell me about what way I should say it better.
Yes. A survey is a part, think of it as a piece of the property research on that property.
Oh, okay. Purchasing. Yeah, that'd be good. Property research.
Is to compile a picture of what you're purchasing, right? Here's a property is kind of like a person. None of them are the same. They all have a different history, right? Unless you're buying a brand new house on a brand new lot, and then you'll be the first one to make its story. But a survey is basically that. A surveyor goes out, measures specifically the boundary lines, looks for encroachments, which means, the neighbor has been driving over the corner of my property over and over and over, and now he's used it as, part of his driveway. What's that mean? Oh, the neighbor put a shed, a foot over the boundary line. The surveyor is going to see all that and is going to basically report that on the survey. And so we take that as a piece of the property research and basically disclose it for everybody to know. And then of course the lender is, and the realtors and you, or everyone's going to say, we're not purchasing this. This is rectified, right? And it gives a chance for people to make sure that what they're purchasing is what it is. Now, Stacy mentioned easements, and so an easement is basically a right of way, and there are certain things that we remove. Every property has things that remove when it's sold. Like I said, all the seller's junk. But then there's certain things that run with the property no matter who owns it. Okay. And that's the term I like to use because it seems to make sense with people. Is some things just run with the property, whether you own it or not. And those are property taxes, right? Something like that. Easements. So if there's utility lines underground or overhead, those companies are going to have access to your property in a certain area in order to maintain those things, right? Gas lines, and those are called easements. So they're kind of right-of-ways. So property taxes and any of these easements, like roadway easements, let's say, I'll use my property as an example. I have 10 acres, and we have a shared dirt road that goes a half a mile, and we all own our property, and then across the dirt road that we all share and drive up and down to our houses. And so
private road maintenance agreements is what we call them.
Yeah, so people
Philip loves private road maintenance agreements, and Ben loves private road maintenance agreements. Not really, but they're fun. Private road maintenance agreements.
So
we're very versed.
Easement.
Yes,
we have an easement where we can all drive across each other's property to get to where we're going, right? In essence, so those things run with the property.
Mm-hmm.
Is that?
Yeah, I don't know. So he said something. Again, he's back here, he's the peanut gallery, but he's muting me, so he doesn't hear me in both places. But private road maintenance agreements, Philip is in East Texas and Ben's from East Texas. And, there's been many a loan where Philip's like, well, can't we just write this in, or can't we just do this? So, and the other factor too, that title companies are very helpful with is navigating homeowners associations and documents and making, you know what I mean? Like making sure those
Yep.
documents are straight. And I'm grateful for that. Like I said, I know I've had many a loan that, can make or break the successful landing of the plane, where it could have gone smoother. And then,
Yeah.
but always good with Stewart Title. So,
Well, and Stacy brings up a good point. Just remember, we're where everything comes to. And so when she mentioned homeowners associations, to me, that's just another one of the things that comes to us. Like I say, whether it's inspection issues or home warranty or homeowners associations or survey or whatever, right?
right.
If you have questions at some point before the closing, before the transaction's final, the title company, the settlement agent, has their hands on everything. Okay. And so if you work through your realtor, then they have a relationship with us, or, we don't mind calling us directly. Your realtor will kind of know the questions to ask a little better, but we have it. We have the information at some point before the transaction's final, whether it's homeowner association or anything else.
So, the last thing I wanted to tell you or ask you about is obviously there's a lot of conversation with the latest changes, and I don't want to delve much into that. But I will say that one of the things that Ben and I have always said is that our worst transactions are the ones that without have any realtors.
Yeah.
And that we need them. Now, in full disclosure, Nate's wife is a successful realtor in Weatherford, Texas. So he would say that you need realtors, not just because of that, but also it's just that people need representation. So all this water that's muddied.
Yeah, so let's speak to that a little bit. And I have a little different perspective than these other real estate professionals, because we don't just handle transactions that are done by realtors.
Good. How are you?
We handle all transactions. Okay, every transaction that the buyer is loaning, borrowing money, has to go through a title company because the lender demands it. And so we handle a lot of transactions that don't have realtors involved representing the buyer and or seller. And I'll tell you, you're taking on some risk that you don't even know what you don't know. That's the scary thing, is you don't know that you should be looking out for survey coverage. You don't know, and the different things that are on the contract that a realtor is, and you can lose by thinking you're winning by not paying realtor commissions. You can lose that amount of money just like that negotiating if you don't understand how to do a comparative market analysis on the property you're buying, or even just down to fixtures and products and construction issues. And, so to
That's such a
Stacy's
great point. You lose. You say, okay, I'm not going to use a realtor. I'm going to gain, but ultimately you lose. Because if you don't have that protection.
And then just remember, the value or the purchase price of the home is not dictated by whether or not there's real estate commissions, and that's the false stuff that's going around.
Ooh, that's good. Say that again.
Yeah, so it's being said that without paying real estate commissions, that you're going to get a better deal, but there's something called an appraiser in the real estate world, and when you go to borrow money, your lender, Stacy, Ben, they're gonna order an appraisal, and that real estate appraiser, who also has to be licensed and goes through an education and stuff, they are going to determine the value of the home for that lender, and so that lender has confidence in lending that money to you. That has nothing to do with real estate commissions. That appraiser evaluates and looks at at least 10 properties that are similar to the one you're purchasing, and goes off historical record of purchase price and evaluates the home for a monetary value. Okay, real estate commissions are not a factor in the appraisal, and so that's the thing to remember: is you think you're going to save money, the appraiser is going to appraise that home regardless. of real estate commissions or not if you borrow money. If you borrow money, there's going to be an appraisal. Now, that's not the purchase price. That's a disclosure to say, hey, this is what the home's worth. So
this is the value of the home.
Yeah,
Right.
if you're under contract for 330 and the appraiser says the property's worth 320, well, then you have some things to talk about, but it has nothing to do with real estate commissions. So
and
just understand
the lender is going to is going to lend on the value of the home or the purchase price, whichever is less.
Mm-hmm.
Whichever is less. So sometimes that can be a little counterintuitive. So,
yeah. And I also think that for buyers, it's been spread due to this, that you're going to have to pay for your own realtor in addition to your closing costs. And in a couple scenarios, that could be true. But get with a realtor that you trust. And the rules are such, even after this change, that the seller will still most likely, in my opinion, pay for buyer's agents' commissions from their side in order to make a transaction work and the buyer be represented. So my opinion is not much will change other than a little bit of the paperwork, and a buyer will still, the majority of the time, not pay their realtors commissions, and the buyer will then be represented well, get the opposite of what the media is saying, get the best deal on the property, because with a good realtor, that realtor will negotiate and look for the bear traps that you don't even know are out there and save you more money than maybe a discounted home price or paying the commission directly to your buyer, as a buyer, your own realtor. You're going to save that money and more by using somebody that does real estate transactions, because we're on this call as new home buyers, first-time home buyers, because we haven't done real estate transactions. And I don't care if you're buying a horse or a car or whatever, you talk to people that know something about buying a horse or a car before you go buy a horse or a car, right? And so the same thing with a realtor, especially as much money as real estate costs.
Philip's on the call, and Philip sold some cows to buy his first home, and he had to get those cows appraised for the value so he could buy his first home. We haven't even talked about that story. So let me tell you, Philip thinks I'm making fun of him, but I'm not. So sometimes we just got to do what we got to do. So Nate, I welcome you to stay for the next few minutes. I know we've gone a little bit longer than I expected, but we're going to kind of breeze through the rest of it, and you're certainly welcome to stay. Why do we buy? Affordability. You may want to be able to purchase for what you pay in monthly rent. The investment versus the expense, increased wealth by building equity. Most people do fixed payments, unlike rent that can go up every year. If you have a fixed rate, your principal and interest will remain consistent. Those payments are consistent. There's tax advantages. The tax advantage of a lot of times when you're a first-time home buyer, 100% of what's not deductible is rent. Well, there's tax advantages in owning a home. Property taxes are tax deductible, and the interest on the loan is tax deductible. And then the freedom, you can make your own home what you want it to be and upgrade your lifestyle accordingly. And that's one of the things, you can kind of make it your own. The change in home value over value after 10 years. I love this. MBS Highway provided this slide. And purchasing a home and holding it for 10 years has resulted in a profit every year except 1 year, which was in 1942. So just think about that for a second and let that land. It's kind of an important slide to think about, that, a lot of times people think, oh, well, will I increase in value? And it has increased in value once held for 10 years every year except 1942. Now, we do renovation finance, traditional loans with renovation writers. I'm going to not spend a whole lot of time on this. We talked about this a little bit last month, but I just want to throw this out here. Sometimes you might look at a property, and maybe the property is in the right school district or it's the right house, but maybe it just isn't, doesn't have the great kitchen, and maybe you just need to upgrade the kitchen. And we have the ability to be able to do that, and then not necessarily cost you time in terms of closing. There are a lot of areas of we do that with FHA loans. FHA is a primary resident loan. You can have 35,000 in total renovation. That includes maybe an HVAC system, plumbing, windows, pool repair, some other desired repairs. You can do it that way. And then we also have an FHA 3OK standard, and that has more to do with structural repairs. And then we also do it with a product called conventional home style renovation as well. The only reason why I'm rushing through this is it's not a typical first time home buyer product, but it is available, and it is available for anyone that might want to use it and maybe consider that on a home purchase. We also do one-time close work. So like if maybe you have property and you want to build something on it. We've come across people that have inherited land and then they want to build on it. And then when you do a build situation, it's called a one-time close construction loan. Philip is working with a customer right now in Lubbock, Texas, that is building a property. And I think you have one more, right?
Yes, I got another one I'm coming up with in Apple Springs in Trinity County. So yeah, we got about to have two going. So yeah.
Yeah. So this is a great way to be able to close on a loan for new construction if you're interested in that. And again, I'm not going to spend a lot of time on this slide. I do want to say the first picture is a picture of a veteran that I closed a loan with at the end of February, and the realtor there is Sherry Adams. And realtors, why you need a realtor is they help you find the perfect home, and they just take the emotion out of it. I don't think I can say it any better than Nate just said it. And so I think that it's something that's pretty important and crucial to the process. Let's talk about your FICO score. And I just want to say, for disclosure purposes, we're not a credit repair company, and we don't. We can certainly give you advice on how you make up what your credit score is made up by, but we're not a credit repair company. There are companies that we work with. We like Rising Point Solutions. That's a company that we like to work with if, in fact, you need some restoration to your credit. But this is how your credit score is made up. Payment history, 35% is payment history, 30% is what you owe, 15% is the length of credit history, 10% is new credit, and 10% is the type of credit you use. So let me just touch on this. The best predictor of the future is the past. So the payment history is very important. So sometimes people are like, oh, I can pay that late. Oh, I can pay that late. No problem. No problem. It is so important. You have to pay things on time. It's 35% of your score, and the late payments don't drop off. They're on there for a really, really long time, and it really can impact your credit score. And I've seen, and Karita and I've worked with customers where they'll have a 700 score and just accidentally paid something late at the last minute. We're trying to close, and it plummets the credit score. So it's very important that we pay that on time. When we're dealing sometimes with young people in their young 20s, sometimes you'll have new credit, and you're trying to establish credit, and you won't maybe have a lot of trade lines. And trade lines are things like car payments, credit cards, potentially a student loan. And if you don't have a lot of trade lines, and let's say you only have 3 or 4 trade lines on your credit report, paying one thing late, that would be tough to overcome because your credit is new. So we try to, like I said, give people some insight on how to improve their score, but how to make it, and avoid pitfalls in having the score being impacted. These are a range for FICO scores. And again, we're not a credit repair company, but I at least can tell you on your FICO scores what these scores mean. A 720 and above is an excellent score. 680 to 720 is great. 620 to 680 is good. 580 to 620 is fair. Anything below a 580 probably needs a little bit of work. We do loans down to a 500 credit score on FHA with 10% down. So the lower the credit score could potentially impact your interest rate. The higher the credit score, you'll be able to take advantage of all types of programs and interest rates. We do what's called a soft credit pull. Sometimes people are trying to prepare themselves. How do I get to prepared to be able to purchase a home? I want to purchase in 6 months or 9 months or next year. And we can do a loan application and do a soft credit pull. That lowers a little bit of stress. It's an easy credit review for us so that we can give you some insight on some things that maybe can be improved between now and then, or if you're in good shape and what you may qualify for based on that information. Again, these are just some information on credit pull. We have a what if simulator. It's kind of called a credit expert, where we're able to kind of give you some insight on something if you pay this off or pay this down, how that maybe could improve the credit score. And that's something that we do when we take a look at it. If it's more than we can do, then again, we're going to refer you to a company that can help you with more involved erroneous information. Sometimes you pull a credit score and you have information on there that's incorrect. And so you need help getting that corrected. Do you know your credit score? I can in the chat, if Kelly, if you'll put the 2 websites in the chat, you can check your credit score annually. Sometimes people would even recommend that you check it more frequently than that, but you can go to the ftc.gov or annualcreditreport.com. That also gives you that QR code there if you want to take a picture of it. But and we'll follow up. We always send some information out after the call too. What makes up your mortgage payment? The principal, interest, taxes, and insurance. The principal is the amount owed that the borrower has owed, excluding the interest. The interest is the percentage charged for the money that's used. And based on the taxes are based on the property value, and it's different in Texas because different areas have different school districts. So sometimes you'll have areas where the property taxes might be a little bit higher than other areas based on the school taxes. Insurance, homeowners insurance it protects the house in case of fire or anything that happens to the condition of the house. And then mortgage insurance premium is anything that's part of the payment that is not, if you don't put down 20%, you might have mortgage insurance premium that protects the lender in case of default. And then where the money can come from to purchase the home. Who would like to cover this? Philip, I elect you.
Sure. We have to get creative on sometimes how are we going to have enough funds for closing. So this is a great cheat sheet on where can we get that information, get those funds for closing. Cash to close is a real struggle for many of my customers. So I want to give a shout out to Maddie Moore. She's on the call today. She's
hey, Madison.
One of my first-time home buyers. We're going to be helping her and her husband out with this program that we're about to talk about, and we're hopefully going to get them also what's called a mortgage credit certificate. So hopefully we'll get to talk about that as well. So where are we going to be getting the funds for your closing? Well, obviously from your checking or savings accounts. If you have those liquid assets available, that's the first place that we're going to be looking. You put that information on your loan application. We have to have sufficient funds for your down payment and your closing cost, which also would be including your escrows, which is 3 months worth of taxes and insurance, a 1-year insurance premium, and potentially the cost of a survey. So we got to make sure we got enough funds. If we're short on checking and savings accounts, we start looking at these other places. We can get gift funds from a family member or an employer. If they want to help with shortfalls, gift funds are eligible sources of funds. 401k loan. Did you know that if you have a 401k plan that you can make a loan against it, and that is not counted in your debt ratios either? So that's a great benefit that a lot of buyers just don't know is an eligible source for down payment.
The other thing too, real quickly, sometimes on a 401k loan, you can actually take money out of a it's called terms of withdrawal. So you get a copy of your 401k and you ask them for a copy of your terms of withdrawal. And in terms of withdrawal, it might allow you to take money out of your 401k called a hardship loan or take money out without the getting hit in penalties for tax as a first-time home buyer.
That's right. That's right. And different retirement plans have different rules. For instance, I've run into some problems sometimes with state employees. Those are not eligible funds to withdraw. So
correct.
So every situation's a little different. Cash value of life insurance, if there is a surrender value of that life insurance policy, that is available funds to be put towards this. That's often overlooked, honestly. Sale of personal property. If you have some personal property that has value that you're ready to part with, you can sell it. Now, it has to be documented. If it's the sale of a vehicle, we have to, show the paper trail, have a copy of the title, check copies, all that, where it was deposited. I personally did sell some cows to put as a down payment on my house. Yes, back in 2007. So they always give me a hard time about that, but that legitimately did happen. And it was the only way that I was able to make that house purchase happen, because I didn't have any of these other sources.
And how much value do you have in that house now?
Conservatively, $150,000.
There you go.
Mm-hmm. Yeah.
No, I don't think the rate of equity that you've built in that house over this time after selling those cows has built faster than the rate of the 401k, right?
Absolutely. Yeah.
There you go.
Yeah, that house has just done really great, but the best investment I've ever made. Employer assistance programs. You may have a employer that has some extra benefits. These employer assistance programs sometimes do help with funds for closing, be it down payment or whatever. Check with your HR department. This may be something available. Sometimes people just don't know that's available. IRS tax refund. We're a little past the typical tax refund coming in, but there are some people still getting tax refunds, and Uncle Sam's date of filing is coming up here, and I guess that's about 6 days. So if you get a tax refund, you can use that towards this purchase. So good for you if you can do that. Second job. Now, if you're getting income from a second job, that can be used towards your down payment and closing cost. Sometimes we cannot use it towards your income qualification, but we can use it for your down payment and closing costs. Kind of depends on how long you've been on that second job, because we have to average it out. You have to be there a certain length of time for the use for qualification of income. Mortgage credit certificate. I'm going to be getting this from Maddie. The mortgage credit certificate is going to be back available here
on
in a couple
April
of weeks.
15th. Yeah, April 15th. It's coming back.
Are we going to talk more about the MCC before this slide is over?
I mean, this is the only time it's on there. The
Okay.
mortgage credit certificate really gives you a tax. It helps you with your tax liability. And it's a tax credit for the time that you own the home as a primary residence. And sometimes the fact that if you qualify for a mortgage credit certificate, we can show that in terms of income. But it's really, I put it on here just so that people know that it's here, along with the down payment assistance program. The down payment assistance program, which is the Texas State Affordable Housing Corporation. One of the things that Kelly can do is give you a link to that website in the chat. There's an eligibility quiz that you can take potentially. It gives you some other really valuable information. That's a down payment assistance program that we use all the time, that we really enjoy having. And that's pretty much it. That's where the money can come from. Anything else you want to say on that, Philip?
No, just I want to point out that this is a program, people that we've done it for, sing the praises of how great this is. I've had teachers tell me, why haven't people talked to me about this before? It's like, I don't know. People just don't, realtors, or whoever their points of influence are, they're just not telling them about it. And that's why we're doing this, to help spread the word. This is a great program. We got many people we have helped make a difference between not being able to buy and being able to buy through either Homes for Heroes, which is a T-Shack program, or Home Sweet Texas, which is another program that's available to everyone else that doesn't qualify for the Homes for Heroes program. As long as in our county, it's an income limit up to 112,000. So a lot of people can qualify for this. So anyway,
Yes. Teacher, firefighters, and then everyone else too. Like anyone can qualify. By the way, you don't have to be a first-time home buyer to qualify for that program. Done plenty of loans. I've done some with Carita where it was people that, they had owned a home many years before and then decided to come back and buy later. I did one where somebody was widowed and they hadn't owned a home in a while. And they can qualify. So you don't have to be a first-time home buyer to use the down payment assistance, and it is available. We're a digital mortgage. You can apply online or on your phone. We'll provide you with a link. All the loan officers have their own link that they utilize. We run cost analysis. There's a loan calculator on that app too, and it provides updates. And then you can securely submit your documentation in that digital world. It's encrypted software. There are several loan programs that we use for financing. I talked a little bit about that. The first one I want to talk about is VA loans. It's 100% financing. There's no mortgage insurance premium or no required down payment. So we are big advocates of doing VA loans. I always talk about Carita and I's favorite VA loan was Billy Bramlett. It's our favorite guy. And he was much older, purchasing a home, and didn't want to use his VA benefits because he thought it would be too hard. The government, this and that. And the VA loans, Kelly worked on one today. No problem. Got the certificate of eligibility just like that. That's what our team does. They get the documentation and access it. It's no problem. There's reduced costs for disabled veterans. If it's 100% disabled, we can even reduce potentially what we might collect for property taxes. And we can do it on VA loans on purchase, refinance, or in high balance loans. USDA is more rural property. There are rural areas in and around outside Lufkin. The rural area that I think of the most that's still USDA qualified in the Dallas-Fort Worth area is like Sherman. There's some areas there. There's some other areas, but it's USDA qualified. It's also 100% financing. It is a single unit home, primary resident, can be used for existing homes. It doesn't have to be brand new. And again, it must meet the income requirements. They're a little more, USDA is a little more picky about income requirements and the debt to income ratio. It's not as liberal as some of the others. FHA loans is as little as 3.5% down. This is a frequent loan that we utilize, especially with first-time home buyers. First-time home buyers that maybe don't have as much credit, or it allows gift funds. It allows 6% seller contribution potentially. So that between that and 3.5% down and a down payment assistance program, it's a deal that makes. And conventional, most common misconception is that you need 20% down to purchase a home, and you don't. You can purchase a home with as little as 3% down, and we do conventional loans on primary residence, second homes, or investment properties. Now, if you put down less than 20%, you will have private mortgage insurance or mortgage insurance premium. Those two words kind of are interchangeable. And but that has a chance to be canceled or drop off once you have 20% equity on the property. And again, I've talked about renovation. That just kind of gives you an example of what we're able to do. Renovate maybe a kitchen or a bathroom, or maybe, update the flooring. And then do's and don'ts. I'm not going to spend a ton of time on here, but I can just tell you that even in the recent months of doing loans, we've had some people do and we've had some don'ts. And this is I think this is Ken's favorite slide. You want to just talk about what the don'ts are, Ken?
Don't change jobs unless it's absolutely necessary. Talk to your loan officer, but if you can wait till after you close, that's always the best thing to do. Don't make any major purchases. on the way to closing. Don't stop by and finance a golf cart on the way to closing. That happened to me about 15 years ago. Anytime people think cash is good, now a lot of times, especially different companies, you may get paid in cash, but before you deposit any cash, definitely talk to your loan officer just to make sure you do a proper paper trail. No credit card advances. You cannot borrow money to purchase a house unless it's against a secured asset. I don't think it was covered earlier, and it doesn't happen very often, but I had it happen one time. Somebody owned a car free and clear, so they were a little short. You can actually borrow against that car. It's considered yours, an asset. Don't open up any new lines of credit, and keep your closing date unless it's absolutely necessary to make a change. If something's coming up, call your loan officer. Communication is the key. So basically, if in doubt on anything, communicate with your loan officer, and that's the key to a smooth closing.
Perfect. All right. Documents needed. We most frequently need like 30 days worth of pay stubs. Some of these things we do automate now. We have what's called a work number, so we can sometimes automate and pull that information. Kelly helps us with that. Know that this slide says 3 months of bank statements. Typically, we do 2. Again, we'd use an automated system called Account Check, where that's possible. Last 2 years, W-2s and tax returns, especially if you're self-employed. And if you're self-employed, we'll also need a P&L statement, year-to-date P&L, just making sure there's still cash flow for the self-employed income. And then sometimes people get dividend earnings. We've had that with like, if people have oil rights or mineral rights and they're getting dividends on that. Employer information, photo ID. We have to have a history of where you've lived and a history of where you work for 2 years. And in some cases, a Social Security card, but not as often as we once did. We usually identify that through a system called Cavers, and we're good with that. Funds to close. They should be in a liquid account, checking, savings, money market. Ben had a closing where he showed up with a shoebox full of cash to closing, and that is not acceptable. You cannot come to closing with a shoebox full of cash.
20 grand in a shoebox is not an acceptable source of funds to close.
Right. The other thing is that whatever if we've verified and sourced your accounts, let's say you're on your way to closing and you have run out of time to get the cashier's check, and you call your dad and you ask your dad to get the cashier's check out of their account, and they come to closing. That won't work because the remittance on the check will show that it's coming from a different account and a different person than what we verified. I know this because this happened to me. So that's not, we have to source all funds. Gift funds are permitted, and we just ask that you ask the loan officer to help with the gift funds. And I did a podcast on credit. I do a 30-minute podcast on credit. This was a picture I took a couple of Decembers ago with our team, and we just talk about our core values with faith and family, accountability, integrity. We're driven, we're committed. Sometimes we feel like we should be committed just because of the long hours and the processes of what we do. But we like to follow up, and we ask for you guys to be our friend, and we can put we'll send this out. You'll get this when we do the follow-up. And then this is just a simple thank you. We ask for you guys to be our friend. Many of us are on different social media outlets, LinkedIn, Facebook. I'm on Instagram, and again, YouTube. We put all our classes on YouTube at stacylynnmortgage, and the Instagram handle is stacylynnmortgage. So but we're available to everyone, and we love it. If you want to be our friend, we would love that. Reach out to us. There's a glossary of terms, and we can send that out as well. A glossary of terms. Does anybody have any questions? I know we ran over. I thought the information that Nate provided was great. I know that he had to go. I know that he could probably have easily talked for another 20 minutes. And specific to Brooklyn and Raul and Madison. Do you have any questions, or your better halves have any questions that we can answer? I see there's some chat, but I can't see what the chat is. So, well, I appreciate everyone. Like I said, I know it ran long, and I appreciate the team for getting on the call. I thought this was a very worthwhile call. I felt like the information that Nate provided was good. Karita, love the fact that you get on here and you help your customers. You're the winner today, because you always input and help good customers. Maddie, I know you're in great hands. Philip is going to take such great care. I know he'll take great care of you, because I know who trained him. I'm just kidding, but he's going to do a great job. And a shout out for Philip. He's got the vice president of production coming to visit him on Thursday, and just a shout out to remind him that Kurt's coming to town, and how exciting that's going to be for him to be there. So anyway, we love surveys. If you guys want to, just give us a shout out and a survey of our class, and anything that we can do to improve the information. But grateful everybody was here, and everybody just have a great spring selling season. Have a good night.